If you've been around Bitcoin long enough, once per cycle, you see one of your heroes fall from grace. And this exception is no cycle. Tom Lee is aiming to create the MicroStrategy of Ethereum.
Well, to me, one of the things that caught my eye is that stablecoins are the ChatGPT of fintech right now.
Tom Lee became the chairman of Bitmine Immersion Technologies and plans to raise $250 million not to buy Bitcoin, but to buy Ethereum. This is weird for this company because for their investors, their entire thesis and even their branding is centered around Bitcoin. Today, we're going to dive into a presentation that Vitalik Buterin, the founder of Ethereum, gave outlining the master strategy for central banks to control your money through the Ethereum blockchain. We're also going to share why this theory is likely to fail, Gauss law, and why Vitalik himself said Ethereum is vulnerable. And this is all on the heels of MicroStrategy, the strategy they're trying to copy, potentially being included into the S&P 500. Maybe the right thing to do is to just buy Bitcoin.
And this is some big news. It's kind of complicated, but probably suffice to say that you all are doing basically what MicroStrategy did with Ether. You're going to make Ether the purchases that you buy through this. You're going to set this whole thing up like this. You want to explain a little bit?
Yeah, glad to. I'm still a big fan of Bitcoin because I think it is, digital gold. But what we've seen in the last, really in 2025 is the financial services industry and crypto are converging. And it really started with stablecoins, which is the ChatGPT of crypto, right? Because it's viral adoption by consumers, businesses, banks, and now even Visa. Underneath the stablecoin industry is Ethereum. That is really like the backbone and architecture of stablecoins. So it's important to create a project that essentially accumulates Ethereum to essentially protect and have some influence on the network. So that's why we're creating this Treasury vehicle to buy Ethereum. The more Ethereum that's accumulated, the more secure the network is. And I think it's also sort of the architecture that future banks will have. When Goldman issues a stablecoin and JP Morgan doing it on Ethereum, as a layer one blockchain, they're going to want to secure it by staking Ethereum. So we're trying to get in front of that by creating a treasury.
But we'll cover that today. This is Dante Cook with Bitcoin Simply. Let's go. People are making ridiculous statements like ETH is going to be the next Bitcoin and Bitmine Immersion Technologies is going to become the next MicroStrategy. It's funny because this is on the heels of MicroStrategy being included in the Russell Top 200 Index, the Top 200 Value Index, and the Top 200 Growth Index. MicroStrategy has passed all of the criteria to be included in the S&P 500, and people say that they're on track to be included by as early as August. MicroStrategy will make $14 billion in net income in Q2 this year. That'll be more than Amazon. And as Jeff Walton and some of the MicroStrategy bros predicted over a year ago, with Bitcoin around 140K and MicroStrategy being included in the S&P 500, well, he predicted that shares of MicroStrategy will be worth around $4,000 a share. That's 10x from even today. One thing to point out is in the clip that Tom Lee says that they're buying Ethereum so that they can have influence and control over the network. Here's the thing. It doesn't matter how much Bitcoin that MicroStrategy or Michael Saylor buys or the other 253 Bitcoin treasury companies right now. Buying more Bitcoin doesn't buy you more influence and say over the network and the protocol. They're competing for a fixed supply of 21 million Bitcoin. And Ethereum holders are competing in a world of unlimited fake tokens created without restraint that is simply a means of propping up the existing financial system.
And just so I understand, it's safer if you own more of it. Explain why that would be.
Well, Ethereum is a proof of stake network.
Right.
So unlike Bitcoin, which is proof of work and miners do all the work for you, and that's why you have decentralized trust, in Ethereum, it's important for these entities to essentially validate transactions. So by becoming a staking entity, you're sort of securing the fidelity of stablecoins. So you don't want a stablecoin like USDC or USDT to be on a blockchain that's outside the purview of the U.S. And so I think Ethereum is a high quality, the second largest blockchain network, and it's over 51% of stablecoins, and
right.
30% of all fees on Ethereum are actually stablecoin revenue.
The central banks, the big banks, all want to be able to control the money, to program it, to manipulate it, to extract fees from the money that you're saving into these protocols, sort of like they already do with the fractional reserve banking system. This was always the game, and this is the game that Ethereum helps him do at scale. And that's why Coinbase, Kraken, Robinhood, and even JP Morgan are building their own tokens on the Ethereum blockchain. JP Morgan just recently came out with their own permissioned coin, and this eventually will intersect with their Connexus network, allowing them to move trillions of dollars of your money without your permission. Vitalik Buterin just gave this presentation at Robinhood's conference, talking about Ethereum's path to becoming a store of value. The large institutions and the pension funds are next. And then if you look all the way to the right of this image, the central banks. That's always been the game. That's always been the big boss. Not only is this a system that I don't think any of us want, but here's the problem. It's a system that's flawed because it's built on a system that is too complex. This is the basis of Gauss' law, which states that a complex system that works is invariably found to have evolved from a simple system that worked. A complex system designed from scratch never works and cannot be patched to make it work. You have to start over with a working, simple system. This is the Ethereum blockchain and protocol in a nutshell. At the base of its code is complexity. It was originally a pre-mined proof-of-work coin where 80% of the tokens were issued to investors that none of us know and that you don't have control over. Then, after a hack, the chain was rolled back and they were able to rewrite history of other people's tokens to save their own butts. They created a new coin, switched from proof of work to proof of stake, and now Vitalik Buterin himself is saying that the system is too complex. It needs to become more like Bitcoin, which is what it was originally built after in the first place. So much so that a month ago, Vitalik Buterin released another roadmap in white paper on how they're going to make it more simple. He says that one of the best things about Bitcoin is how beautifully simple the system is. He then goes on to say that Ethereum is hard to understand, it's hard to build on, its infrastructure is costly, it requires a lot of maintenance, it has a lot of surface attack for breaches and hacks, and there's a risk of catastrophic bugs. Is this a system that you want to build your money on? But back to Bitmine. You know Joe Lubin, the co-founder of Ethereum? Well, he's already tried to do this sort of strategy. He's implemented an Ethereum Treasury strategy with SharpLink Gaming. And I won't bore you with the returns, but they've been less than stellar. It looks like all Ethereum or crypto token charts eventually. A huge spike, which you buy into it, and then they sell it off because you are the exit liquidity. And there's a strong possibility that this sort of thing happens with our very own Tom Lee's Bitmine Immersion Technology strategy. But before we go into the rest of what their strategy is, let's thank our sponsors. Ledn. They've been the leader in Bitcoin-backed loans since 2018, issuing over $9 billion worth of loans to tens of thousands of customers across the world. Ledn helps you to unlock liquidity in your Bitcoin safely, securely, not by wrapping it in some yield, some staking token, or some other Ethereum protocol. It's a Bitcoin-only company that is ensuring that you're able to unlock liquidity in your Bitcoin safely, confidently, fast, and transparently. Liquidity is in your account in less than 24 hours. Loans start at just 12.4%, and you can get 0.25% off of that if you go to learn.ledn.ao/simply. That's learn.ledn.ao/simply. Do the simple thing. Buy Bitcoin, never sell it. One of the most simple things you can do in Bitcoin is just remove your Bitcoin from exchanges. Remove trust from the system. Don't have your Bitcoin be subject to hacks, which inevitably are going to happen on crypto tokens and platforms. We see it over and over again. Remove this risk from your generational wealth by scheduling a free 30-minute consultation with the team at thebitcoinway.com. Head to thebitcoinway.com/simplybitcoin to get a coach to coach you how to protect your generational wealth the right way. Okay. So here's the ultimate strategy for Bitmine.
So Bitmine Immersion, what you're doing is a $250 million private placement, which is all going to be put into Ether?
That's right. We created a carefully curated list of investors to bet on this. If you look at the press release, it is the blue chip, both in the financial world and in the crypto world. We have
Founders Fund, Kraken, Galaxy Digital.
Yep, Pantera. Yeah, so these are in the crypto world, and these are like sort of the blue chip crypto entities. And of course, Founders Fund is legendary in the traditional financial world.
And how do you measure this? It's just based on exactly how Ethereum is trading?
Well, yeah, the strategy of the company is going to be based on how much Ethereum is held per share.
Okay.
And as of today, it's $4. And the company, as we explained in the press release, can increase its holdings of ETH by, getting yield from Ethereum, doing financing transactions at a premium to their holdings, and of course, if Ethereum goes up. So I think there's three ways that that value per ETH actually grows.
They're going to make money for staking. And for all of you people who are new to crypto investing, understand that when you hear the word staking, you typically have a scam, a breach, or a huge security incident on the horizon. But that may not be this scenario. But nonetheless, every time that you hear a strategy that talks about yield or staking, it underperforms Bitcoin. My issue with Bitmine is that they've sold investors one story, them becoming a Bitcoin network company, a Bitcoin miner, having a Bitcoin treasury, and then they suddenly switch gears and go to an Ethereum strategy. One of the reasons that people love and are head over heels invested into MicroStrategy is that they know that they are laser focused on one thing and one thing only, Bitcoin. They will issue more debt, more equity, raise more capital to buy more Bitcoin, the fixed supply asset. And sometimes great investors, even people like Tom Lee who've been around Bitcoin for a long time, tend to overcomplicate things instead of just doing the simple thing. Just buy Bitcoin.
I run into crypto people that have been in the business for a decade, and they have very complicated ideas that don't work.
Yes.
And I offer them a simple idea. I'm like, here's an idea. You're a public company, sell your equity, buy the Bitcoin. They're like, no, that'll never work. Okay, well, I guess it might work. Well, what if the Bitcoin goes down? Well, blah, blah, blah. Okay, I guess it worked. And you know what the latest pushback is, Jeff?
Let's hear it.
The latest pushback is, well, it worked for you, and it worked so well that you're the winner and there's no room for another company to do it in the market. So we literally went from, I don't think it'll work at all, to it might, to it did. Oh, it worked too well. That's my excuse for why I'm not going to do it.
Yeah.
And people just come up with these gigabrain excuses for why they don't want to do the simplest thing in the world.
I didn't think I'd see the day where Tom Lee would get dragged over to the crypto side, but here we are. It happens every single cycle. Don't overcomplicate the trade. The best trade 11 out of the last 14 years has been to just buy and hold Bitcoin. It's outperformed everything, and it will continue to do so. One of the ways you can continue to not overcomplicate things is by learning as much as you can, not about crypto and staking and everything else, but Bitcoin and another facet of Bitcoin, Bitcoin mining. And you could do that by coming to the largest Bitcoin mining expo in the world at the Mining Disrupt Conference happening in Dallas, Texas from November 11th through November 13th. Get 20% off your tickets by using the promo code SimplyBitcoin at checkout. Thanks for tuning in today and for putting up with my scratchy voice. This is Dante Cook with Bitcoin Simply. Happy stacking.